Welcome to Stocks That Can Double series, stock number 4. Previously, I've done 3 videos on stock number 1, 2 and 3. So this is the 4th video. I'm going to leave those links in the pinned comment. The stock that I'm going to talk about is LVMH, Louis Vuitton Mont Hennessy. Depending on where you live, we can own the stock with ticker LVMUY or LVMH. I'll walk this company LVMH through the 5 filters that I look at before I invest in any company. Number 1 is value proposition. As you can see on the screen, LVMH owns majority of the luxury brands. You think of a luxury brand, LVMH probably owns it. Brands like Louis Vuitton, Dior, Fendi, Givenchy, Sephora, Bulgari, Tiffany & Co, Hublot, Dom Perignon. So there are a lot of brands owned by this conglomerate. So the value proposition is clear. This company owns incredible brands that are pretty much irreplaceable in our societies. The second filter that I look at is margins. As you can see on the screen, LVMH has incredible operating margins north of 25%, and the net profit margin is wavering between 16 and 20%. So they have very good margins. Now let's move on to the third filter, that's the balance sheet. They have close to $11 billion of cash and cash equivalents and also short-term investments, and their long-term debt is about $11 billion. So the balance sheet is not so great, but they make a lot of acquisitions and that takes a lot of cash. So the balance sheet is decent. Now on to the growth potential. As you can see on the screen, until 2020, they were growing at high single-digit percentage because the luxury goods market has a CAGR, compounded annual growth rate, in high single digits, and they were growing with the market. But in 2020, when the pandemic hit, a lot of people had a lot of extra money because of the stimulus and they're not traveling. So they've spent a lot on these luxury goods. That's why the growth is very high in 2021, 2022. But when 2023 and 2024 hit, because of the high interest rates, it was difficult for people to borrow money. So that has caused a slump in demand for luxury goods. Also, there is high inflation. People are choosing to spend money on things that they really want, and they do not have spare money for these luxury goods. And also, there is weakness in Asian markets, also the Asian travel. But all of these things will get moderated in the coming years because the inflation has to go down. When they see that inflation going down, then the interest rates will have to go down. It's easy for people to borrow money, and when they have that extra money, when they want some luxury goods, guess where they want them from? That's from LVMH. So in my opinion, high single digit to double digit growth is possible in the coming years because there's a pent up demand as well. So the growth potential is clear. Now let me move on to the last one, valuation. Is it a good price for me to buy? For that, I have to look at its current situation. At $130 stock price of LVMUY ticker, the market cap is $325 billion and the P ratio is about 21. So that's relatively cheap for this incredible company. The dividend is about 1.72%. The EPS is much higher than the dividend, so they can easily pay out the dividend. So the dividend is safe. Before I show you the valuation, I want to clarify that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about LVMH. In full disclosure, I do not own LVMH at the moment. I may buy it in future. So in 2024, they made about $91 billion of revenue. And the estimated growth rate that I'm inputting is 7.5%. That's high single digit growth. This year, the revenue growth rate is pretty much flat. And next year, could be flat again because there is still high interest rates, inflationary risks, and low Asian travel demand. But it's going to come back in 2026, 2027, 2028. So this is the valuation for 2029. I'm estimating average growth rate of 7.5%, with which this company would make about $130 billion of revenue in 2029. And as you have noted, their net profit margin is wavering between 15 and 20%. I'm assuming 20% here because as they get bigger and bigger, they can be more efficient and they can get to that 20% net profit margin, with which this company would have a net income of $26 billion in 2029. I'm assigning a multiple of 25. Company like LVMH, which owns incredible brands, has a big moat. and people would pay 30 plus multiple, but I'm being a bit conservative, so I'm only going to pay 25 multiple. With that, this company's market cap would be about $653 billion in 2029. Currently, the number of outstanding shares are $2.52 billion. And this company makes close to $15 billion of net income. And they can use that money to buy back shares, or they can acquire another incredible brand so they can continue to grow their revenue as well as profits. So I'm not going to consider the profit that they're going to make in the next 5 years, and that is me being conservative. So I'm keeping the number of outstanding shares as same, 2.52 billion, same. So this is actually conservative. They have a lot of spare cash. They will have a lot of spare cash in the next 5 years because they are profitable, right? But I'm being conservative, so I put 2.52 billion outstanding shares. When I divide the $653 billion of market cap with 2.5 billion outstanding shares, I get a stock price of $259. Currently they're at $130, so that's close to 100% gain in 5 years, plus the 1.7% annual dividend that we get for the next 5 years. So in my opinion, LVMUI can easily double in the next 5 years based on my conservative valuation. If people pay a higher multiple, or if they can grow faster, or if they can acquire another incredible brand and increase their margins, or if they buy back their shares significantly, the stock price in 2029 would be much higher than $259. Let me know your thoughts in the comments. Thank you so much for watching.